Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and today a quick video about gold and silver, and especially the ETF demand. Have a couple interesting charts that I think you're going to want to stick around for. Although before we get there, just a quick look at the prices. Here we see on Kitco, 1730 for gold. You see quite a rally over the last couple days. And as we'll take a quick look at, you're going to see some divergence in some of the gold and silver figures. Again, here we have 1730. You see 1680 even below that Sunday night, rallied throughout Monday, and then today on Tuesday. Silver 1570-ish, let's call it, on Kitco. Pretty flat since the open on Sunday, maybe 20 cents higher. But we'll take a look here. You see on investing.com, there they have gold at 1754 and silver at 1594. So keep in mind, depending where you look, you're going to see some different versions of spot, especially if you're buying gold and silver. Certainly, that's a reasonable question to ask a dealer. What spot price are they using? And at least ask them if you need an explanation of why they're using that one and if that makes sense. Um, Again, if you go to Miles Franklin, that's our precious metals sponsor. I promise you, Andy will be treating you fairly on that one. So if you do have any buying or selling needs, Arcadia at milesfranklin.com. But back to our charts here. This one was the one that I found so interesting. Hopefully my head's not covering up the right side of that chart, but you can see here, these lines at the bottom are showing how many ounces are being reported going into the trust. This is the gold chart, so that would include primarily GLD, a bunch of other ones. But again, you see, well, here's 2019 demand. 2020, at least the first half of the year, first quarter was higher than last year, but really blows out in these last 3 weeks. These are weekly bars, so you see it was strong the last 2 weeks prior to this week, and then really just quite a spike. And I was curious, this chart goes back to 2017, but fortunately we have the chart. Here's all the way back to 2001. So the amount of gold that was just added in here is by far almost double the previous peak. So not a surprise that you see the gold price rallying quite a bit. Interesting also looking at that previous peak here in 2009 and what happened then. Again, you see that's right around when the price was dropping from 1,000 to 700. So you had a very similar environment to now where the price dropped because of, and this is something I address in my book, The Big Silver Short, more on the silver side, but the same dynamic where the price was dropping in the midst of financial chaos and money printing and a lot of surge in demand for metals, yet the price drops, supply goes off, there was a supply shortage rather. And again, you can see here is your evidence that people were noticing that and buying. So fascinating things that happen over time in the gold world. Here we have the silver chart. So you see about 3 and 4 weeks ago, you really had a spike in silver. Still silver being added in these last 2 weeks has slowed down a little bit. But again, something I keep an eye on because it does have a lot of relevance. In fact, you see that last summer when the price was going up quite a bit, not coincidentally, there was a lot of metal, I say, being reportedly added. If you want to make the argument, as I know many do, that the metal does not necessarily go into the trust, certainly I can understand that concern. which is why there is benefit to owning physical in a place that you have safe and have access to. So there you go on that chart. Few last quick notes before we wrap up for today. Here is from Bullion Star. This bottom chart is showing the percentage premium on a gold American Eagle. You can see that spiked quite a bit. Really interesting. I've talked, many others for years about how at some point it would seem like the physical market would divorce from the paper market. Seems like that's begun to happen. Um, and you can see that reflected in the premiums. Here was an interesting story. Here is everything the Fed has done to save the economy. And just thought this was fascinating the way, again, the Fed has already been introduced as the savior. Rate cuts, slew of credit lending programs that can inject more than $6 trillion. But I mean, it's similar to saying, well, you're in quite a jam, but you double down on another credit card to pay off the more immediate loan. Does it buy time? Perhaps. But I mean, I'd rather see someone doubling down on their credit card than what the Federal Reserve and the government are doing, because that seems pretty far past the point of anything remotely resembling a semblance of the reserve currency. But nonetheless, another story here. Charter flights insured to ship gold to ease the supply logjam. This one was from last week, but I thought was interesting. We've talked about all of these issues on the LBMA, and here you see trying to get some insurance on the plane so it can fly the gold from one spot to another. Uh, Fascinating in this digital world that it is so shocking to find ways to deliver on gold that I don't understand why that should be necessary if the gold is just on a one-to-one basis, which of course it's not. But here we see another factor that is driving the price rises that we've seen, where Marin Katusa reports how the coming supply shock in mining, as he points out, you can't just flip a switch and turn the lights back on, the mines back on. Takes some time, and this was really a powerful chart here. You see, this is by day here, so each day over the last since March 10th, how many mines have been shut down. So you see that's a growing number. Just did an interview with James Anderson of Vangold today, which will be posted tomorrow, where he does some exploration projects in Mexico, and we'll talk about what he's been seeing. Will there be more mine shutdowns? Yes, I expect more mine shutdowns. So pretty straightforward on that one. And there we go. Do mine shutdowns lead to a price shock? In normal times, a decrease in supply leads to higher commodity prices. And if you are of the school of thought that we have fractional reserve in the gold and silver markets, then certainly that would be a driving factor, as well as Fed expands. Again, this one's a couple days old, but I think they even added on to the headline since it was first published. Fed expands corporate debt backstops, unveils new programs to aid states, cities, and small businesses. Keep in mind every amount that, whether it's fiscal or monetary stimulus, I don't know that it really matters. I mean, it's sure there's the semantics and the differences, but all of this money is just being created, and is again one of the reasons why you see people flocking to gold. I think it'd be impossible for that to have been completely priced in so far, because so much of this has happened so quickly. I don't feel like it's really sunk into the world, certainly just from the investors that I talk with, that we're living in a world now where there's no limit on what the Fed assumes and prints. So we'll see how that goes. And of course, our last story is that gold will continue to outperform silver by Tom Brady, who, in addition to signing for the Tampa Bay Buccaneers, is actually, here's the best part, executive director of JP Morgan. Is there anything Tom can't do? Although, in all seriousness, I don't think it's the same guy. Although, interestingly, he is here in the University of Colorado in the Denver Business School. So maybe if they ever reopen, I'll put a note in here and go over and say hello. I'd love to meet Tom and talk some gold and silver, and hang out in the or I guess he's not. Yeah, executive director of the JP Morgan Center. Okay, so maybe not for JP Morgan. Well, maybe we'll go talk with Tom about it, but either case, that's the news for today. So we'll keep you posted. Have another interview coming tomorrow. Although, if you can't wait until then, here is a video about a great book about the manipulation in the gold and silver markets. And with that said, enjoy.